Okay, so hello and welcome to this first video in a series that CBRE will be putting together. We are looking to outline all the different aspects of buying into overseas residential investments, mainly with a UK focus. We are kicking off arguably with one of the most important aspects, but probably one of the least known about, being tax. I am delighted to be joined by Jamie Morrison, who is Head of Private Clients at H.W. Fisher. Jamie, welcome.
Hello there. Nice to see you.
Jamie, could you give us a quick overview of who H.W. Fisher are, who you are, and what services you offer?
Sure, absolutely. So my name's Jamie Morrison. I'm Head of Private Clients at H.W. Fisher. We're a top 25 UK accounting firm, ranked by size. We're based out of a single office in central London. We've been supplying services to clients based in Asia for over 20 years. Myself, I've been coming to Asia for over 10 years, and we specialise in helping landlords mitigate their tax liabilities and make sure they're reporting their taxes correctly to the UK tax authorities. And we deal really with a cradle-to-grave situation from buyers looking at how to purchase their property, whether they use companies, family structure, that sort of thing, all the way through to when they get to the end and wanting to sell their property and how to report their capital gains.
Amazing, thank you. And obviously, with the budget yesterday being the 3rd of March 2021 and the UK government coming out and giving some favourable changes to especially stamp duty, a number of buyers here when investing in the UK, be it London, Birmingham, Manchester, we often get asked a number of questions, and I'm quite keen to go through some of those with you now and get your take on them and maybe discuss those a bit deeper just so we can get a clear understanding for our clients.
Sure.
So, I mean, the first one would really be, in terms of the recent budget, what does that mean for Hong Kong buyers investing in the UK? What's really changed?
Okay, there were three main announcements, one of which had been trailed before, which is we got confirmation that the 2% surcharge comes into effect from the 1st of April 2021. Just as a reminder, there are two things to consider here. Number one, if you've already exchanged and you exchanged prior to the 11th of March 2020, you are going to be protected from the stamp duty 2% increase. The other point is in relation to people who perhaps are moving to the UK. So those people who are looking at moving to the UK, providing they move to the UK within sort of 12 months after paying the 2% surcharge, they can actually reclaim it. There are specific time limits that need to be adhered to, but there is a possibility of actually reclaiming the 2% if you're looking at moving here.
Okay, so if you are a Hong Kong buyer and you buy a property in, let's say, Birmingham, and you then move to the UK within the next 12 months, you are then able to reclaim some of those additional stamp duty costs you would have paid upfront.
Yes, you can reclaim some of that 2%, absolutely. What we've also had in the budget as well is the Sdlt holiday exemptions have been extended, which is really good news. So we've actually got a gradual phasing. So we've got an extension of the current regime through to the 30th of June 2021. Then the bans go up slightly until the 30th of September. And then from the 1st of October, effectively, we're back to the old stamp duty rates that were in play beforehand. And lastly, what we've also had is a change to corporation tax, which was widely trailed in the UK press and is going to affect overseas buyers in as much as those people who bought their properties in companies, so it won't affect individuals, just companies, they are potentially looking at an increase from going from a 19% tax rate to 25% tax rate. The reason I say potentially is it depends on your level of profits. And you've got to have rental profits, so that's after deduction of all costs, in excess of £250,000 before you're affected. If you're below that, you're either going to be at 19% or a tapered rate somewhere between 19 and 25%.
Really interesting. So I suppose for your average investor from Hong Kong that may only have a couple of properties, that shouldn't really be a huge issue for them in either the long or short term.
Absolutely right, yes.
And then second question, in terms of actual stamp duty, how much will stamp duty now cost? And there are any rough examples you could give us?
Absolutely, yeah. So let's look at a unit that's worth £500,000. So let's say if I exchange prior to 30th of June 2021, and if I'm buying it, it's my first home, for example, I'm going to pay stamp duty around £15,000. If I do that after, then I could be looking at £25,000. So there's quite a jump in terms of where the rates are going to be, whether I'm paying the 2% surcharge or not, and whether I've got the 3% supplement or not. And again, it's a similar situation in if I look pre-September 21, I could be looking at 27,000 or 37,000 because that 2% surcharge has quite a bearing on my stamp duty rate. So it really depends, where I'm at and when I'm completing.
And that was based off a £500,000 unit, so yes. 5 in Hong Kong, basically.
Yes.
Great. And then I suppose moving on from that with the tax allowances, and yep. Obviously CBRE and as well as HW Fisher, if anyone watching would like a stamp duty calculator, we can obviously provide those for you and give you an exact breakdown on specific unit costs. That's no problem at all. But in terms of personal tax allowances for Hong Kong residents, so if you're a Hong Kong resident, you don't have a British passport, just a Hong Kong passport, what are the tax allowances you would face when investing, or you would have when investing in UK property?
Okay, so if you are a Hong Kong passport holder, or if you're a B&O passport holder, then you will not qualify for a tax-free personal allowance that you can use against your income. You would qualify if you hold a full British passport or other EU passport, and there are certain other countries with whom the UK has a qualifying double taxing agreement where you can get it. So if you hold any other nationality, it is worth examining whether you qualify or not. Everyone gets a tax-free capital gains allowance. That's given irrespective of nationality. So that's always available. And the same for the inheritance tax thresholds. Everyone qualifies for the same £325,000 inheritance tax threshold. So those two are definitely available. The income one is dependent on your passport status. And at the minute, unfortunately, Hong Kong and B&O passport holders do not qualify.
Great, thank you for clarifying. And then moving on, it moves us into my next question quite nicely. We often get asked if buyers who are based here are looking at buying an individual unit in their own names, is it beneficial to buy, let's say, a husband and wife in, say, the wife's name, or specifically the husband's name, or maybe even the child's name? Is there any benefit from a tax point of view?
Okay, it's quite a wide and open question because there's so many different variables that one has to think about when looking at this. So if one looks at it through the prism of stamp duty, firstly, it may be worthwhile looking at possibly buying in children's names where possible. And one's also got to remember the legal requirements of property ownership in the UK and take this into account as well, because obviously minor children can't get valid title till the age of 18. So one always needs to consider that. But in terms of stamp duty, of course, if you've got someone buying who doesn't own property, and remember, husband and wives are aggregated together for this purpose, so you can't do it with spouses, but certainly with children, one could look at and say, well, actually, if my child owns no property and I'm buying a UK property, well, I'll avoid the 3% surcharge at least. So that's something to think about there. Otherwise, I think it's around looking and saying, if I fragment the ownership, what do I achieve by that? Well, if all my family have got tax-free allowances, well, actually, I can move the rental profit around so that it's spread between a number of people, and actually then we're perhaps covering it with our allowances. That also covers me for my capital gains in future. If I sell a property, then actually I've got multiple capital gains allowances that I could possibly use. The downside is all those people have to report the income and report the capital gains. So I increase my administrative burden by having to deal with all of those tax return filings. So there are a number of different things I think to think about. But certainly where husband and wives are concerned, usually we tend to find that they purchase jointly together because there's no stamp duty benefit. You get the benefit of the split, and also where you have inheritance tax issues, any transfers from husband to wife, wife to husband are tax-free.
Really helpful, thank you. And I suppose just adding on from that, if it was bought in a child's name, it would most probably have to be a cash purchase, Obviously, for everyone on this video watching, if you are looking at buying something in your children's name, for getting mortgages, obviously if it's then in your name, it's far easier if you're buying it than cash outright, and you want to put that property in your child's name for that unit. It can be very difficult if they're, or actually impossible if they're at university and not earning an income, to then get a mortgage under their name. So then have to be in the parent's name for that mortgage. And then I know we touched on it a little bit earlier, but obviously BNO passport holders are a big thing at the moment. It's we're meeting more and more buyers that are looking to explore that avenue and potentially move to the UK. So if people are applying now and they're looking to move to the UK in the next sort of 12 to 24 months, again, can you just clarify any potential tax restrictions or loopholes there may be that could benefit them?
Absolutely. So coming to the UK, I think the first thing I would say is important people take advice. And the reason for that is there may be things you need to structure with your affairs prior to coming to the UK, because obviously Hong Kong in particular has a very tax advantageous system compared to the UK. So it is definitely worth taking advice and thinking, is there anything I need to do before I come? Certainly after you arrive here, your tax position, you are in a slightly different tax position to someone who is a long-term UK resident or someone born from the UK. And the reason I would say that is we have a tax regime here that applies to people who are what we call non-domiciled. So that effectively means where you were not born in the UK to UK parents, where you've typically come from overseas. Then what you can elect to do over the first 15 years that you live here is to say, to the extent you have income or capital gains arising outside of the UK, you can elect not to bring that money into the UK and then not pay UK tax on it. So you've got ability to defer any taxes. So that's really the big advantage for people moving here. And that applies in the first 15 years. For the first 7, you can do it for free. Then after year 7, there's a £30,000 charge. And after year 12, there's a £60,000 charge. So I think it's worth taking that advice before coming to the UK and understanding how can I structure my affairs? How can I benefit from this tax regime? And then also in terms of things like the 2% stamp duty charge, to make sure I'm in the right time limits to reclaim it and how I go about doing so.
And if one of those BNO passport holders wanted that advice from you, how early do you think they should be speaking to you? At what point in their buying process is it worth picking up the phone or sending you an email?
I think as early as that decision is going to be made. I think doing it a week before you come is pretty impractical, because there are often things to consider. It's not a binary issue of do something or not do something. It's obviously needs to be consulted and talked about and a decision reached. So I would say as early as possible is the best way.
Great. And from the other side, I suppose, if we're speaking about investors and who buy property to let out, we often get asked, what's the tax implication they have for, they're based in Hong Kong, they live in Hong Kong, they work here, but in terms of renting the property out in the UK, what tax will they be paying on that rental?
Okay, so it's pretty established under international sort of tax law that where you have real property, so things like residential properties, and you let those properties out, then the country where that property is located gets the taxing rights. And that's pretty universal across the world. So the UK will charge you income tax or corporation tax, depending whether you hold the property personally or through a company, but you will be charged a tax on the rental profit that you generate. So that's the first thing. As far as the UK is concerned, the important thing I think that buyers need to think about when they purchase a unit is firstly to make that initial registration to the UK tax authorities. The reason you do that is otherwise there are instructions to apply withholding tax on any rental payments you're going to receive. So the first thing to do is to register with the tax authorities. That removes that withholding tax being applied on your rent. That's stage 1. Stage 2 is then obviously to aggregate all your costs together and then make sure you follow the reporting deadlines in the UK. And that will, again, depend on whether you're invested via a company or whether you're invested in your personal name. Your reporting deadlines will vary depending on thereon. So I think, again, it's important as part of that process around the time of completion to make sure that registration's done and that you appoint a tax agent in the UK, or at least review the requirements on the UK tax authority's website and understand what you need to file and when, because what we do have here is quite a high penalty regime for non-compliance.
That's great advice. Thank you very much. And then I suppose it moves on quite nicely. If people own property, a lot of these people own property in Hong Kong. Is there any impact on tax situations if they own multiple properties in Hong Kong, then buying the additional property in the UK?
So the only implication is as far as stamp duty land tax is concerned. So where Sdlt is concerned, any properties that you own in your individual name will be taken into account in determining whether the 3% surcharge applies to you or not as a second home surcharge. That doesn't just look at UK properties, it looks at properties on a worldwide basis. And also husbands and wives are aggregated together for this purpose. So you cannot have a situation where one spouse owns all of the properties and the other spouse says, well, I don't own anything, so I don't pay the 3%. That doesn't work from a UK stamp duty perspective.
Correct. Now, we do often get asked about husbands or wives splitting, obviously, units, but obviously for clarity, it's wherever you own in the world. And if you are husband and wife, then you are formed as one and aggregated together, and you will have that additional stamp duty. No, really helpful. Thank you. And in your opinion, we often get asked it as well from our side, whether it's better on whether you're better off or not to buy in a personal name or within a company structure. From your experience, what do you advise and what do you think works best? So
to a large extent, this really depends on the level of portfolio or the size of the asset that someone is buying. It also is sort of affected by whether people qualify for tax-free allowances or not, because individuals get tax-free allowances in the UK, but companies don't. So whilst individuals may, on the face of it, pay a slightly higher tax rate, if one takes into account the fact that a large lump of their income could be tax-free, the overall rate may actually be lower than sort of the headline rates that one sees published. So I think, again, it's an important area where people should take advice, number one. Generally, I run a rule of thumb that if people are either buying an asset or running a portfolio that's worth £2 million or more, then a company tends to be the best vehicle for them to purchase property. Whereas where they've got portfolios and assets below that, then I think individual names tends to work better.
Really helpful. Thank you very much. And I suppose then that leads on. If someone has a property, they've owned the property for a number of years, they then look to dispose of it and sell that unit. What tax implications are they going to have once they've sold the unit?
Okay, it's a really important question, actually. So capital gains tax is the tax that's levied where properties are sold. The capital gains tax is typically based on either the cost of the property or the April 2015 market value of the property. If you purchase the property prior to then. So it's important to get a valuation at that point. You only pay capital gains tax on the difference between the two. The really important thing is that this capital gain needs to be reported within 30 days of completion of the sale and the tax paid. And a lot of people miss this and come along later on and say, well, actually, I've sold something, but I haven't reported within the deadlines. And again, there are penalties if you don't do it. So it's really important as part of that sales process, as well as dealing with your solicitor to deal with the sale, is also thinking I need to report my capital gain.
And obviously, that's a service that H.W. Fisher and yourself personally can assist with. And then what would be really interesting for both myself and I'm sure listeners of this is, in terms of H.W. Fisher and yourself specifically, Jamie, when you're dealing with investors and overseas buyers and owner-occupiers, where are you saving the money? How are you helping them sort of be the most financially efficient they can possibly be?
Okay, I guess at every stage of the property cycle. So the first stage would be getting involved at the start in considering how to structure a purchase, looking at the general rental yield that's likely to come, the anticipated costs, and then working out from a tax perspective how to mitigate the tax. That will typically be around the ownership. So do we do it in individual names? Do we split amongst family members, or do we buy in a company? So that will typically be the first stage. Second stage will be at stamp duty level. So we can review the purchase. We can confirm what the anticipated stamp duty will be. So that will also give buyers some comfort that the stamp duty rates that they're paying are going to be right. Then during the ownership process, it will be a case of actually working with the landlords to say, what costs have you got? What can you claim? How can we mitigate the tax as much as possible through making the maximum claims that are there? And then again, when they come to sell the property, it would be a case of saying, okay, what costs have you incurred? We can help them navigate the system to make sure, A, they file on time and comply with the regulations, but also minimize the capital gain that's payable. And then I think also from an inheritance tax point of view, which is something that people worry about, is ensuring that they're structuring their affairs in the right way to pass the assets down with the minimum amount of inheritance tax possible. So it's at all stages of the property ownership cycle.
No, that's really, really helpful. And in terms of moving forward then, if people wanted to get in contact with you and speak to your team, give us an idea of the best way to go about doing that.
So the easiest thing is WhatsApp, is WeChat, email, telephone. We're available through all usual mediums, as myself and Jay Sue, who works with me, who are available to take questions whenever any sort of potential buyers or actual buyers would like to ask them.
That's really helpful. Thank you. I know we will, after this presentation is finished, we'll have a quick slide that has contact details for both CBRE and HW Fisher. So if anyone would like to get in contact with either one of us about anything you've heard today, please feel free to reach out. We'll have QR codes, email addresses, numbers as well. So any of those communication methods, we're sort of looking forward to hearing from you all. And please do reach out on anything you've heard, if there's any property related questions you may have. And all's left for me to say is thank you, Jamie, so much for your time today. And hopefully we look forward to seeing you in Hong Kong soon and meeting some of our clients. And thank you guys for listening. And we look forward to seeing you all soon.
Thank you very much, everyone.